Good morning. I'm Gord Long with the Financial Repression Authority. It's a real pleasure for me to have Ty Andros joining me this morning. Ty and I go back quite a few years. We used to do shows together called Global Insights. I think we did over 200 podcasts together back after the financial crisis. Ty is well known as a prolific writer on the web, with most notably the Tedbits newsletter, and is currently the Chief Investment Officer at the Sanctuary Fund. Ty, welcome.
Thank you for having me, Gord. It's good to talk to you.
It's like old times here this morning. Ty, some of our listeners may not be familiar with Tedbits. Could you just give them an overview of your background, things you've been involved with, and what you're currently involved with?
Well, I am an Austrian economist and a true-blooded Austrian economist. I really don't deviate from it. Austrian economics is just human behavior and common sense and history. And what's going on is human behavior, common sense, or nonsense, and history. And we're at a period where people have forgotten history and they're doomed to repeat it. But only this time, it's the greatest blow up in history. And it's also the greatest opportunity. I don't want to be frightening people. It just is what it is. And the renewal that will come afterwards will be wonderful, but we have to go through winter. An economic winter where unwise decisions and myths are exploded and common sense returns.
Ty, you're one of the best I know, not of just being an Austrian, but being a real practitioner of the whole School of Economics and applying it to investing. So we're going to get into that. But let's start, if you could. What is the Austrian School of Economics in your own words? How would you describe it?
The production of wealth, producing more than you consume, meeting people's needs and doing it in a superior manner, which is also called capitalism. Okay, Austrian economics and capitalism are one and the same. It's living within your means. It is producing wealth, not consuming it. We're in an economy now where all the economy is predicated on consumption of wealth. Well, all of the wealth in America was in an earlier era for the most part. I mean, the wealth that's today may look monumental, but it's just a manifestation of the debasement of the currencies.
We truly confuse credit and debt with wealth, and money being a store of value. And I know you're a huge proponent of that. And right now, and I know you're often say this, that capitalism is about getting more for less, and right now we're getting a lot less for more through many different functions. But Ty, knowing that, how do you apply Austrian economics today as an investor? What are the key milestones that you should be using?
You have to pray on paper, okay? And some of the most successful investors out there, in fact, the whole banking system preys on the illusion of paper and reserveless credit, and producing more than you consume, real things that cash flow, that are basics. It's solvency. Austrian economics is just common sense, history, and the production of wealth. And everything else will flow from there. Rising middle classes. I mean, the reason middle classes can't rise is somehow the public's gotten the idea that they're going to raise their lifestyles through the stroke of a pen at a central bank or at a government. Whereas the only way they're going to get up and they're really going to get to success is by, going out and serving others and being rewarded for it.
Ty, one of the things that you're noted for is the indirect exchange, and that is the Austrian school of applying the indirect exchange. Could you explain what that is?
The indirect exchange is a way that you go through a currency and financial system catastrophe. and it really is something that has to be practiced throughout a period of fiat currency, and it, obviously starts early, and what it is basically exchanging something of a certain value, and in this case, fiat money, for something of certain value, real wealth that cash flows, and wealth can only be made in certain manners, and in today's economic world, growth is a function of a printing press, consumer consumption and credit creation, and asset inflation, and they're presented as wealth production versus the economic formulas that created the real wealth created by their descendants. And by that I mean our grandfathers and fathers lived in a sound money society, and to get real wealth they had to produce more than they consume and create, serve their fellow man. And real wealth can only be created by growing it, mining it, building it, manufacturing it, being rewarded for providing more goods and services for less to consumers, which is also known as capitalism. You can't really have wealth accumulation unless you have a sound or semi-sound financial system. We can look at one of the most successful businessman in most people's mind in the nation, and he's a master of the indirect exchange. Who's that? Warren Buffett and Berkshire Hathaway. They take constantly diminishing paper money and exchange it for companies which create more than they consume for inelastic basic industry products and services for consumers. He rides the winds of inflation and deflation of fiat currencies and the credit-based financial systems to create opportunities just as bankers do, and they've done for centuries throughout history. Warren Buffett was on CNBC today, and he said the stock market could close tomorrow, and the Federal Reserve could quit printing money or double it, and we wouldn't be affected long term. And he's correct. All of Buffett's businesses, for the most part, will survive a currency and financial system extinction event, because they're not going to go away. People are not going to quit, having to buy insurance or having to, use Heinz ketchup, or you lose Burlington Northern trains, okay? Buffett is actually very far along in that he also sells worthless paper whose claims are constantly debasing. So when he sells insurance, he's creating a claim that is constantly shrinking. If inflation is at 8% and he's offering a 2% return on an annuity, he's making 6% per year on the claim that he sold. And if he's able to put it into real things that really will reprice and create cash flow, it's multiples, and we're going to show that. And so basically, his insurance operation is a way to sell worthless paper and then take the money and really put it into wealth creation and into the types of businesses that will survive the biggest boom or the biggest bust. But, we'll just give insurance, okay? If he's insured your property at $1 million and the price of the paper's diminishing at 8% a year, you're going to get $500,000 in real purchasing power in about 8.5 years. But he takes that money and he converts it, like we'll use the Heinz example. He just overpaid for Heinz. He didn't overpay, because we don't know what that money's worth. That money for him is just a diminishing asset, completely going down. He understands that it's a diminishing asset. He's out there elephant hunting for projects because he doesn't want to hold that money. That's the devil he's holding in his hands.
See, Ty, I listened to everybody talking about Warren Buffett overpaying for Heinz, and to me, everybody is completely misunderstanding what he did, except you. You clearly see it, because there's a difference between price and value. And what he did is he paid a price denominated in US dollars, but what he got was value. And he knows what that value is going to be worth going forward, both from a free discounted cash flow its ability to reprice, and how it has a moat around it. Even in very difficult times, it can continue to generate cash. When you know that and you understand that, you can understand the value that's intrinsically there. And therefore, he wasn't overplaying on price. He would if he was going to sell it tomorrow, but he holds them for a protracted period of time, and that's why he consistently wins. He's the ultimate, as you point out, master of the indirect exchange.
He has been doing it since the early 70s, and he's done it over and over and over again. He knows what he's doing, and he doesn't have the short-term time frames that other people are so crippled by.
Precisely.
And he's willing to work his plan and stay with it because he knows as long as the printing press is alive and well and fiat currency and credit creation is that he has a one-way bet. It just is not an if, but a when.
That's why right now he's now saying it's time to start buying. That doesn't mean you start buying the stock market. He's not buying this. He never buys the stock market. He buys companies and he buys specific assets. That's what he's doing. He doesn't buy stocks.
And companies that are relatively inelastic. But, Buffett's been doing this for years. You can't store wealth in paper, and we just can't emphasize it enough to any of our listeners. Okay, there's nothing safe or risk-free in storing wealth in a fiat currency or sovereign bonds.
Ty, you're so right. Years ago, we could argue that it was, because money was a store of value, because it was pegged to the gold. And it's not to support gold or silver here. It's to say when you move to a fiat currency, money no longer is a store of value. So once you understand that, then you got to say, okay, what do I invest in that will store my value against inflation? Once you get into that thinking, everything starts to change. And that's what I'm talking about, this difference between price and value.
Buffett, as we got, price is what you pay and value is what you get. He operates insurance companies, selling paper claims that are constantly dropping. And then he turns around and puts it into real wealth building things like Burlington Northern or Heinz or Lubrizol, or, we can name all the different companies he owns. And what are they? They have real plant, they have real equipment, they have relatively, it's basically all basics. We don't ever see him really get into high tech.
He doesn't go into high tech.
And the reason being is because the high tech has got, I'll call it elastic business models where, using a railroad or using ketchup, I'm sorry, but I don't care if it's a depression or not. Somehow I've got to get around, and somehow I'm going to probably put a little bit of ketchup on my sandwich.
He would argue because the product life cycles are too short, and there's not enough of a moat around it in terms of sustaining competitive advantage. Big fancy words, what basically said, look, people will always need ketchup, and if I got the best ketchup out there and people have a preference for it, I have guaranteed some level of cash flow. That will reprice no matter what happens to the currency.
Like I said, Gord, he is just, he's played this for 40 years. He doesn't really tell you what he's doing. But he's become the most successful investor in the world doing it. People are really only talking about the indirect exchange now. We have a lot of, I'll call it pseudo Austrians who just don't understand it. They think that you can buy a stock. And, when we're in the crack up boom stages, you'll be able to. But right now, that's a mug's game because they're going to be printing so much money going forward that those returns are just an illusion. Don't be fooled. Your stocks are going down at an accelerating rate.
Ty, a point I'd make in terms of the Austrian pure concept, and you're well aware, from an indirect exchange standpoint, would say anything that stands between the commodity or service that's actually produced and the person or thing or entity that will finally consume it. Anything that's in between is part of the exchange mechanism, and it's indirect. And that exchange mechanism is where value is added, but it is transacted typically with money. Monies are paid just as a way of expediting that transfer, of moving it from a commodity to consumption. But the point is that when you start to understand that it's based on the currency's value that you're doing in this intermediation, between the two, then you understand the severity when the money is no longer a store of value. And so everything then gets completely distorted. You get the mispricing and the malinvestments, which we're clearly now into. And so that's why this indirect exchange, one, identifies the problem, but two, also tells you what the solution has to be. And the solution has to be to put your money into a store of value. That in itself is a show unto itself. But more and more people, from Ray Dalio, etc., are all now starting to scream that you need to have your money in real things.
No, they're telling you to borrow the money and get into cash flowing businesses and don't worry about it, because the money you pay back is going to be worth considerably less than the money you're borrowing.
Exactly. Borrow the money because it's useless paper and put it into something that's real. And by real, I mean, in his case, and it's the right thing, generating cash flow, positive cash flow.
Yes.
Real things, Ty, do not mean gold or silver. That's a hard asset, yes, and they're real. But the real assets today are one that not only have a store of value, but also generate wealth. As good as gold is and as silver, it doesn't make you any money. It protects you from the debasement of the currency. It's a wonderful insurance policy. It's a superb thing to have yourself protected with, but it doesn't generate wealth. It protects wealth.
But I would argue that the money is commodities, and that oil is not a commodity that's going to really lose a lot of its value just because people aren't going to quit running their cars or heating their homes, or corn or soybeans or lean hogs or whatever. Those silver, for that matter, that we think of it as a monetary metal, but it's an industrial metal. All of the excess inventories in silver are gone since it's become such an industrial metal.
We've said it many times on the show, and in one of your slides too, that wealth can only be mined, it can only be grown, or it can only be produced, manufactured. You can't print it. And so commodities are, by their definition, wealth. And agricultural products that you're growing are, by definition, wealth. Everything between the actual production of those and the final consumption of them is, in fact, this indirect exchange, which takes away, which can become, if not correctly handled, can be a losing proposition. But there's no wealth in money. Money, in fact, is only a representation of what it's going to be the day you decide to transact it. A hard asset will always be wealth.
The hard asset will always be wealth if it's ubiquitous in human consumption.
There's a supply and demand element to it.
These investment themes, the indirect exchange, it is going to be front and center for all of our listeners until the business models of the West are changed from consuming wealth to producing it, because all the wealth in the West was created by producing wealth. Now they switched that business model in 1971 at Bretton Woods too, and now all of our economies are based upon consuming wealth and borrowing the money and pretending that the borrowing is GDP.
Tom, you spend a lot of time on techniques for indirect exchange and the kinds of ways you should look at it. What do you recommend to our listeners of what they should do or think, or what they should be considering at this point in time?
Well, they have to have real assets that can cash flow and move across, I'll call it a currency extinction event or extreme damaging of it. Things like, cash flowing oil and natural gas, farmland. Look at the amount of money that's gone into farmland. It's going up 30% a year. Well, those are people that have got a clue that they can't store wealth in paper, and they're willing to overpay for it, just like people said Warren Buffett overpaid for Heinz, but they know that what they're actually giving is worthless paper. And they know that sooner or later that will catch up and they'll get those values that they thought they were buying. I'm going to just say clearly that, real wealth creation in a farm is true wealth creation. And so it's an investment theme, and oil and natural gas, intermediate-sized businesses that aren't over-leveraged, that have consumer basics like the kind that Buffett buys, Procter & Gamble. These things are going to, be left standing if the greenback becomes a blueback. Or if we have an overnight devaluation of currencies, those products they have are going to reprice. And the government can try to prohibit the repricing, but when that happens, you have what's going on in Venezuela, which is there's nothing there to buy. It's just everything's off the shelves.
Yeah, what's happening is these controls that are coming in, and there are all sorts of various forms of controls, are nothing more than the government's attempting to stop the repricing, because the repricing will destroy collateral values and bring the system down around its ears. It's got to do, in its mind, everything possible to push it out, to paper it over, to hide it with liquidity, but it can't. Liquidity doesn't solve a wealth problem. And in fact, we have slowing global growth right now at a fairly significant rate, and we've also got crumbling collateral value. How long they'll be able to paper it over, I don't know. So to your point, it's not if, it's just when.
It's just when. And we're in the process now. Like I said, you just have to do the indirect exchange over and over and over again in your life. And, it may be volatile between here and the ultimate denouement, but at least you're going to be standing whereas 9 out of 10 of your friends are going to be going to their demise.
So the key part, Ty, is to take action, not only to understand the problem, but actually do something about it.
Understand there's only there's $175 trillion chasing $60 trillion in maybe real assets. So, the real assets are going to expand in value as the fake assets decline.
Yeah, there's been some studies out recently, Ty, that show when you look at total debt and total equity around the world in various countries, and you start to realize that real assets, a hard thing to find. We've got everybody chasing yield, and by yield, you're actually trying to chase real business opportunities, and they're confusing yield with value, and so it's high risk, and that's clearly what's been going on.
You get no yield and you get no value.
You make up for it in extended risk.
Yeah, exactly.
You get lots of risk. Ty, we're up against our hard line. Any last closing comments on this subject?
This is the greatest opportunity in history, without parallel. I don't mean, we've had lots of episodes of this before, but never on the grand scale we have now. And you can't be confused. If you are, then, you better start doing your homework. But you can't store wealth in paper. You can't store wealth in over-leveraged assets that are a result of over-leveraging. It's a fool's errand. And you need to work hard to sow the indirect exchange throughout everything that you're doing, and diversify your portfolio in a manner that allows you to put the indirect exchange to work and learn how to make money when things fall, because things are going to fall. Although we have wealth creation under a full frontal assault, it's become a criminal thing. So you need to get out of the sunshine. You need to quit drinking the Kool-Aid. You need to do what I do. I do absolute return alternative investing, and I use professionally managed futures and long-term gold and silver strategies to repair paper and get the printing press out of your face. You need to look at what Buffett's doing and really realize the genius of it, because this man has been practicing Austrian economics since the beginning of Berkshire Hathaway, and obviously that's why he's the second richest man in the world, because he's not Bill Gates. This is not Microsoft. He's just bought and sold the booms and busts and sold paper, just like the Federal Reserve and the Treasury do. And he's done it like a master.
Ty, we have to break now, but are there any final comments you'd like to leave with our listeners here this morning?
Well, it's a troubling time. We need to be well informed so we can try to prepare ourselves best to meet the challenges in front of us. If you're an investor and you do it right, it's going to be the greatest opportunity in history. And, depressions happen, and this one's going to be particularly nasty. In fact, it'll be the worst one ever. But I'm an optimist, And there'll be people that'll come and fix it. There are people like you, Gord. It's the people like me. It's the entrepreneurs. Luckily, we have more entrepreneurs here in the United States than any country in the world. And internationally, there are great places where entrepreneurship is still being allowed. But those areas are shrinking every day as the cronies, I'll call it, corral you into their crony investments and their financial systems and their crooked regulators. And they all work hand in hand. But I am busily working on turning it into the greatest birthday or fun party that I can make it. And
Ty, if our listeners want to talk to you for any reason or get information or follow what you might be writing, because I haven't seen a lot of Tedbits recently because I know you're just so busy. How can they do that?
Well, I would prefer if they would just send you a little note and you can forward it to me and I will contact them if they'd like. Or Ty Andros at let's just put it at tyandros@tedbits.com. I haven't been writing for a while, Gord. It's you are a hero of mine, Gord. What you're doing, you're like a pamphleteer of the American Revolution, and the service that you're doing is wonderful, and people need to appreciate it. And your hard-hitting pragmatism. You don't have a problem bringing in some of, I'll call it, people that have counterpoints to our views. And, in subsequent places, you kind of set people straight. Well, I'm going to just tell you right now, it's not a blip in the road. This is just the beginnings of the bust, and it's King Kong versus Godzilla.
Ty, I share your optimism. We have a very tough hurdle in front of us, a very serious global financial set of issues that have to be resolved because the world is trying to change, and that's what the crisis is really about, change happening. But I believe on the other side of that, if you can keep your wealth intact and stored, and you're prepared for this storm, the future is brighter than, because of so many advancements in so many areas, is greater than we're ever going to see it, and the world will move at an accelerating rate. But not until we've cleaned the decks, because we've got so many fallacies for whatever reason that we built, and fallacies, political, financial, economically, that have got to be reset in here. So I'm optimistic, but we can't be naive with what we've got to fix first. And we don't fix these things easily. They typically only get fixed in a crisis. Ty, we have to break. Always a pleasure. Always enjoy your frank, hard-hitting comments. You spare nobody, and that's what our listeners want to hear. We want to hear the facts. So thank you very much, Ty.
Well, just remember one thing, Gord.
Oh, absolutely. Ty, thank you.
They will print the money.
They will always print. Don't worry. They'll print the money.
That's right.
And Ty is reminding me.
I have closed my stuff with Gord every time like that, and nothing's changed.
Now, Ty and I have been closing everything like that for 6 years now. And Ty, it's just as appropriate now as it was in 2008. So when we started that. So don't worry, they'll print the money. Ty, talk to you again. Bye.
There's nothing they won't throw insolvency at.
Thanks again.
Have a great day, Gord.